Hey, good morning. All right. So hopefully you understand what I was saying. We don't need to talk about that ad nauseum, that one. We could go over it again tonight if you like. All right. So Click was no good either, and GTI no good. FL Footlocker could turn into an entry for a swing. NCNA Lobo. Let's see. No. Lobo. No proof of continuation, see? Lobo. Lobo. EXO, ABP. Nope. ABP. Nope. I2. No. EXO, ISSC. No. PTPI. So I don't really see anything I like for day trades today. Nope. Krev. And now we're down in 20%. So no, not too interesting. Although Click and GTI are over 100%. That's pretty, nice sign for the day trading market, for the penny trading market, if you will. But I'm not seeing any good opportunities. What was that one you said? Forget the name of the one we were looking at. I'm not seeing it in the list, so I'm not sure. Oh, DLO, yeah. Why is that not in my list? That's nowhere in my lists. Sometimes that happens when stock doesn't show up. So yeah, there's just no follow through. There's no proof of follow through. You don't have back to back two green candles that are strong. And that's what I like to see. So that's not to say that this stock is not going to be amazing, and you could always get it at the pre-market high with a stop at somewhere reasonable like the pivot, and you can try and play it. But I don't go after stocks that don't look fucking credible. You know, I just let's say that again. I don't go after stocks that don't look in fucking credible, and that's why I save money. So I'm not interested. I'd like to see it, have at least two strong green bars back to back, or it can pause. It could have been like this, and then a little doji, and then the next bar like this. But I need to see proof of constant demand. If there's not constant demand, then this is just a random chaotic back and forth thing that just happens to be coin flipping around upward, but it can easily it's just random. I need to see at least two consistent back to back strong bars happen. And even then, I'm not sold. But at least I might play something that looks like that, especially if it has a lot of potential. The other problem is it's run right into supply. 13 to 14 is a multi-day resistance zone, like multi-week, like 1 month of resistance. A lot of shares, people trapped underwater up there who want to get out. Then once it gets over that, it's only prone to go to 16. So why would I get in at $12.50, on the highest, most toxic type of trading possible called day trading? Why would I do that to make $4 on something I probably have to put $2 of risk on? To make a 2 to 1, I'd rather just wait till tomorrow. See what I mean? It's just not worth fucking around. You're gonna lose your R today on that, most likely. And if you don't, it's just a coincidence. Like I wouldn't touch this. It's just not good enough. It's just not good enough. All right, moving on. Let's see. There was a couple tickers I needed to take a quick look at. We got 3 minutes before the open. First of all, Foot Locker. Let's take an analysis of that. Okay, it is up and over the 200. So if Foot Locker goes, this could be quite a catalyst day. It's a huge 100% almost open on good ER, I guess, or there's some news or something. I don't know. Actually, maybe it's a merger. Gosh, let me take a look because I don't see ER there. I thought it was an ER. Dick's Sporting Goods announced a $2.4 billion acquisition. Oh, never mind. We're not going to go after. We don't go after acquisitions because they just flatline. All right, so we have nothing this morning. Now, other things that I wanted to look at were like, and you need to get really good at understanding that, because I've moved on like instantaneously. There's nothing this morning. I'm not going to go around going like, really? There's nothing? Why is there nothing? Is there, what's the, and then, we sat around for an hour talking about why there's nothing. There's nothing, period, the end. And moving on, let's take a look at ZS and ULS and make good use of our time here. ULS, nice high type flag. I like it. I think we should put it on our list if I didn't already, but I think I might have. It looks familiar. I think I looked at that. Nope, it is not on my list, and that's just because it has that flat one high type flag, but it's still quite interesting. All right, RBRK. Lucky. Get it. Yeah. Pinterest. I don't know. Let's see. RBRK. Okay, yeah, that's good. We're already in that, or I put that we could be. Yeah, I'm in that actually already. RBRK. Pinterest. No, there's nothing good going on there. What about it? What about Pinterest? Don't even be interested in anything that has a descending 200 moving average. That'll help you like get rid of 90% of things that you shouldn't be thinking about. Okay, RGTI. This is the one that went crazy, right? Oh, yeah. This is definitely on my list. RGTI. Nice. Yeah, this looks pretty good. Let's get an alert line across the top of yesterday on that, because that's a nice spot. Okay, we have an alert on Psych, which I'm already in. And that's just because it is pushing up and over my alert line on it. That alert line a bit higher now. Rocket Lab, I believe I'm in that. Yeah. Let's see what that's doing. Palantir is filling in a little bit, so we'll come back to that in just a second. Okay, Rocket Lab is not necessarily an entry. It was yesterday. Yeah, I mean, you could still be an entry here. Stop at low of the day yesterday seems fine. Okay, that's Rocket Lab. Let's clear that off. Core, COR. This was a inversion, a undercut rally entry. You see? Do you see why? Because we studied that a lot, Michael. Came down kind of violently through the 50 moving average, and then we came back up above it. Next day, that's an entry. And it could have been an entry the next day when I finally noticed as well, right here. With a stop down here. Because why? Because that's where the 50 is. My stop is at the 50 moving average. And today, since the 50 moving average is moving up, it's even higher. So this can either take off or not. We studied those undercut and rally entries, and they work out about as often as they don't. They don't work out more often than they work out, but they provide great RR. Like look at this one. This is a 5-to-1 just to the recent high price, and they're pretty likely though. They have a good likelihood. It seems like, I mean, if it's in an uptrend, it seems like a third of the time So if you can get better than 2 to 1, then that's profitable. Okay, IXHL does look like it's shitting out right now. I didn't quite get the undercut and rally on the moving average lines, but I see it now that you showed it on core. Yeah, but it's got to be a significant moving average line or something that it just goes to show that there's just so many ways to find an entry. But the nice thing about the undercut and rally concept is you can find an entry at a lot of spots. Like you could use the 20 moving average, which is this orange line here, and you could find an entry, see it undercut and closed underneath right here, right here, sort of like a reclaim over highs, and then look what happened. You do get it happens to work out, and then again over here somewhere, like you could get like right here if you just wanted to play the bounce. It's like it's just a different way of looking at things, and that's what I love about it. And then I have a rule that I created in it, which is that if it comes back to break even after a couple days of moving, just get out at break even. You don't even have to, you tried and it didn't work, and then you get in a couple days later and boom, look at that. So it's a very useful entry technique. Now over here, we come up and over the 20 moving average. It didn't undercut it. Well, it undercut it way back here. And so that you would be waiting for an entry on, and it looks like perhaps like this one with a stop here, and it turned out to be correct. And that could have went on an incredible run. And you can use that however you need to. But look, it also undercut the 50, and then that was the entry. So there was like a triple confluence entry and a kind of a bounce off of the compressed, all the MAs compressed right there. So you can use the MAs for sure. Absolutely. You can find, I mean, he basically that's what he was saying is that the concept can be used to just think about things a little bit differently. Like if there's a support area, which a prior low kind of is, then undercutting it and rallying above it is the beginning of it turning around at that support area. Boom, period. That's it. And so it doesn't even have to be, theoretically, it doesn't even have to be an undercut of a pivot low. It doesn't even have to be an undercut of a moving average. It could literally be just going into a support zone somewhere, like how it's in the scheme of things, or anything that you deem to be something where it could reflect, and then the next day it gets up and over the high of that day. And so you get in. And I think that it works for a day and a half or a half a day, till the next morning minimum. And then from there, maybe it goes on a run and you get quite a good RR out of it. The thing that I think is most brilliant about it is that you can put your stop at the at that key level instead of the low, the pivot low. I mean, if it broke that pivot low, that creates the undercut, but you don't need to put your stop at the low of the candle, but the recent low. It can be the reclaim level, not the reclaim level, not the level that goes up and over a prior candle's high. But you see what I'm saying? Like here and here, like I just used the 50 moving average because that's really what we undercut there. But we also happen to nearby see that pivot, and there was also these two kind of like lower lows there. I mean, there's a whole bunch of support down in here, So this is worthwhile, even if it fails out on me. It was a worthwhile endeavor to get in the other day on that and put my stop down there. So it's a pretty brilliant idea. Spotify, let's take a look. Spotify with a little bit of an alert there. Okay, we need to move that up a little bit. Spotify is an undercut rally entry. So I don't know if I'm still in that though. No, I'm not. I don't know why. I think I didn't have cash to get in the other day. I really would have wanted to. But if I can today, I will. However, I got to do a wire out of this account. So let's see. Yeah, I mean, this could still be an entry area. This is entry area with a stop below the undercut or significant Any area that you want to deem intelligently a good stop level. And to me, I think it's like this low here, 615, 615 should do it on Spotify for an entry here at 632. So that's $17 a risk. Anyway, you probably don't have enough money for those shares, but yeah, I think you do. All right. AFRM. Whoops, I accidentally deleted that alert. Hold on. AFRM. Okay, AFRM came up and out of a nice little cheat entry and is tucking back in a little bit. All right, and that's the only reason why the alert went off. So I'm going to move the alert up here to let us know when it's continuing. T2. T2, did you have earnings? Thursday night. Damn, it did not have earnings, but this is an entry on T2. You could build up something going into earnings. Yeah, I don't think that's enough time. I don't think it's really going to happen enough. No, I'm going to have to wait for earnings, but what I'm going to do is I'm going to put that right there like that. So when earnings happens tomorrow, if it happens to be positive, we'll get alerted. TJX, okay, this is continuing. And the upper right of this mature base, kind of cup and handle-ish breakout. Earnings in a couple days. I like it. I prefer a pullback entry if I could get it. Core, we just looked at that. Yeah. Core is an entry. And you can put the low, you can put the stop down there around the cross of the moving average would be good. Psych that we just looked at that, I think. Yeah, just a little bit pulling back after pushing today. The last few days. Okay, Dash. Dash looks like it's continuing. That wasn't what the alert was about, though. And the alert was just leftover. It was just a leftover alert. But Dash, it looks great. And if you think of it in terms of undercut, you'd be in here if this was the undercut. See how that works? It's like it's a pattern in and of itself. That could have been an isolated ER event. You have this down move, and then it starts to inch its way back up, and then it moves up strong, and then the next day, boom, and this becomes the entry. And depending on what it undercut, you could put your stop based on that, but certainly coming through it, you could use low of that day or prior low, or depending on what it undercut, somewhere in there. And see, so it can be a standalone as well, like an ER cat. Like if this was none of this data before, ER crap out existed, and it just like gapped way up, like Footlocker. Let's just use that as an example because I can draw on that. So it gapped way up like this, and then this day it goes way down. It does something like this. It's not an acquisition, but it goes like that, and then it does this, comes up strong that next day. Then the next day blasts through it. That's an entry, and that makes total sense. So it's that same pattern, though. Kind of a pullbacky, undercutty type of thing. All right, let me take a quick look at the market. And yeah, DLO did crap out. What is this? Yeah, you actually are still in IXHL, hopefully. And what did you say? Let me see what you said there. To a bounce. Yeah, it is. It's a kind of bounce technique. Yeah. All charts and had that question is more of a technical understanding. Yeah. I didn't quite get the undercut and rally on the moving average lines, but now I see these showed it on core. When I saw that before, it looked like a bounce and maybe just shook out a bit and bounced. But now if you look at it like really like a surgeon, technically, you can actually see the whole mechanical setup even on a bounce. It's almost like saying, why do things bounce? Like it's getting pretty close to being able to interpret a bounce. Yeah. I see that. Yeah, I understand the concept of the bounce, but putting the two together really helps me see it. Yes. Okay, the market itself, a little bit of a pullback. We had PPI information this morning. Oh, good. Rates are coming down right now, so that'll add some lift to the market throughout the day. I think that'll add some support, I should say, throughout the day. So rates are coming down, so we'll probably have a supportive day. We won't have the floor fall out from us. But remember what I said. I believe we're in a lockout rally. So I do not think market makers are very interested in letting anybody in. So I think any pullback is going to be met with strong force demand. I could be wrong about that. But my thesis last week was that this whole week will be a lockout rally. And here we are on Thursday. And I've been right for 3 out of 3 days so far about the week. Let's see what happens today. But that's what a lockout rally is. And it doesn't have to last the whole week. I just happened to say that last week. We could pull back red here a little bit, and then tomorrow pull back red like this. And that, to me, will still have constituted a lockout rally where people didn't get, as long as it doesn't, like, think of it this way, as long as it doesn't go below the prior day's low, then it hasn't reversed any progress of a locking out, because that's what people would be looking for on these significant type moves. This day going below that is meaningless. Yesterday was a little bit meaningless. Kind of the momentum slowed down yesterday, but that's fine. It's still locked out. You see, we could fuck around in here like this for a week, still not break down that progress of the lockout rally, and then go boom like that, and it's still a lockout rally. No one can get in. Everyone's waiting for a much better entry. Something like down here. And I'm saying I don't think that's going to happen. I think we're going to have lockout rally, and we're going to have all-time highs pretty soon, if not some consolidation next week. But we're not going to see uh, this happen. I could be wrong though. Just remember, be ready to be wrong. It's one of the best traits in trading. Don't ever think you're right. The market is always right. All right, we don't need to watch Footlocker. CoreWeave moving around. I'm trying to see if we can get some follow through on CoreWeave. This was a IPO that I'm in with a stop way down here financed. This is not so great. Let me take a look at it on the daily, on the intraday rather. It's a multi-point downtrend. I'm going to cut. But I did hold through earnings, which was a beautiful thing. All right, out of CoreWeave, so I've pocketed like half a grand of gains on that, plus some more. I think some more. Let me see. Actually, I don't know if it's correct, but sometimes it'll tell you. Oh, yeah, $718. What I have the profit loss year to date, and so long as I haven't traded in and out of something more than once in the year, then it tells me like what was the cumulative result of everything I just fucking did on something. And on that one, it looks like $718, so that's good. All right, which was good because I think 500 was where I was at. So I think that being able to hold through earnings like that, that was a beautiful thing. I don't know if you guys caught my lesson on that the other day that I printed up in the group, but the idea was, so I got in here. I would love to have gotten in here or even here because this is IPOU pattern. But I got in here with a stop down here. And the thing followed, even broke out all-time high as an IPO going into earnings. And then this is the earnings day. Okay. So going into earnings, I got all the way up here from my entry. And by selling half-ish, around here, I financed the stop down here. And it turns out the options were pricing in that the move from here based on the fundamentals, etc., the ER move when ER comes out expected was plus or minus $13. It was at 68, so that means it could have moved to 55 or 70, 84 or something, like way up high. And so that means I have fully financed to break even the possibility to hold through earnings. So that's how you do it. And you can decide whether or not you want to hold through earnings like that. And like I advised Michael this morning, like one of the things you could do instead, if that doesn't work for you, if you're too scared of, that it could move more, like it could be way down here and you lose too much, then you can just use your profits. So take everything out, but leave what you've profited. And now you're literally playing with house money. So now you leave house money on the table right here, all your profits. And now there's no pain. Now it's just your profits are working for you. I mean, in theory, you could just leave that position in there for the rest of your life. You just let the profits just do whatever they want in this IPO name. And you just leave it in there, and then maybe you can um, transfer that stock to a different account, and then you can create an account of just positions that you're going to hold forever that you're in with house money, like beyond your original money. And you can just let those ride for your life and just see what happens. So there's lots of concepts of what to do as far as using gains, to finance stops, to create snowball positions, to leverage, to create free rolls, and to create uh, positions you can't lose on. So those concepts are very powerful, obviously. I need to take a look at a couple positions pulling back on me a little hard. Let me take a look at Tesla. All right, I'm not too afraid of that. No, that looks all right. And then that's Tesla. What's this one here? VST. Yeah, that's fine as well. And there's really nothing else too bad that I'm holding. I did just get rid of CoreWeave, so we'll just get rid of that. All right. And that's a very cool concept, yeah. Palantir, Tesla. The market's pulling back now. The 30-year with a little bounce, but I think it's going to, I could be wrong, but I think it's going to stabilize. Although Bitcoin is moving kind of strong, and Bitcoin tends to lead the market. What was I just about to look at? Some names. So we're at about 30% growth, breadth in growth. And some of the top names on my list on my screener this morning over there, moving well off of their open, is NXT. So we like to look at them. Next tracker, very strong right side. Looks like it's a recent IPO, and it could be going for all-time high breakout even today. Like, well, that'd be incredible. But it goes on our list. It will go on our list because of that. However, I don't know that I would just get out on that all-time high move. But wait a minute, is that an ER move? It is an ER continuation, so that could be an entry. I did get out of that one position, so I could probably try this. So stop at low of the day, unless, let me take a look. NXT, we don't know if we have much time on this, but let's see. Yeah, you'd have to use low of the day, 53.50. And it's at 60. So that's 650 of risk. So 77 shares is what I want to do. Go, and I'm going to mark that off. So this is ER day 2 continuation with a domino setup. Did I just click out of there before clicking? Okay, there we go. And domino setup because it's going to break the all-time highs on an IPO. It's an IPO. What do we get here on Dash? Another alert? What's going on Dash? Yeah, that Dash looks quite good. It looks dashing. I don't know if I would want to get in right there, though it is a pretty nice little Atlas pattern. See, and using that concept, you could put the stop at the 10 moving average there, but I think that's just too soon. Probably this one, 191. The low of this bar, Low is 191.80. And we're at 198.35. So 655, I already did the math on that just a minute ago. That's 77 shares, just like on NXT. So we go over to Dash now, and I pick up 77 shares of that. Okay, I mark that off, and that's the position I'm in. That would be perfect. And the entry price was 198.32. Boom. Okay. All right. Let's look at some other names. That was NXT. Chewy. I saw Chewy at the top of the list. What's up with Chewy? All right. Anybody on Chewy? This is amazing. This is looking so good. Do I have Chewy on our list? I should better. There it is. Chewy. Yeah. I have so many incredible names. I mean, this is just. There's. I don't know if you can see that, but there's a good. I don't know, 100 names just right there, and then that's not counting my previous page. But there are some duplicates there. Maybe half of, maybe a quarter of them cross over. But let's flip through those. I'll just show you those. Here's what we're looking at. If you want to start recording, if you want to come back to this, or if you want to mark this spot in the program, we're about to flip through all the names of my hot list. Here we go. UI. So now what I'm looking for on UI, because it just looks great, is one of these, maybe an undercut entry or pullback entry, a cheat entry, anything like that, because we're lifted off and extended off of the 50, all moving averages. You want to catch a pullback entry. Net, same thing there. GE, same thing there. AXP. Before we do that, what I want to do also as part of a routine is go through all of my holdings, and I can do yours as well. Yeah, and I can do yours as well. And what we need to do is just on a daily basis, always with your positions, just remember to do this. Check where you want your stops and update them if need be. Okay, you should always do that. So like for instance, VRNA, like what am I doing? Like right now I have my stop down here. And why? I don't even remember why that is, but it looks like it's close to the 50 moving average, so I don't mind that. However, why I put it there at 65, it probably had something to do with the way it was moving those days in intraday when I looked at it more specifically. But can you see how that's kind of an undercut rally entry? That's like a perfect one. I mean, it's not perfect. It's a little bit harder to see, but my entry was perfect. Okay. See, we went below the 50 and came back above the high of that candle there. And you would put your stop at the 50. But I put mine at 65 because I don't know. I intelligently looked at the intraday movement and figured out 65 could be my line in the sand. Okay, don't worry about that. Do it your way. Put the stop fucking here. Don't make it hard on yourself. And then, but you see, that's perfect undercut and rally entry. You're trying to find a pullback entry. You don't really want this one because on the 8 moving moving average or the 5 moving average, whatever that is, I forget. Oh, actually, that's Gamma. Yeah, Gamma will help you get out of your position. But in any event, that's a different discussion. My point was, you're looking for a pullback entry on such an incredibly running stock. If you can get it, you're going to be stoked, right? So you had the undercut of this 100 right there, and that could have been an entry with stop at the 100. It gets knocked out, and then it happens again. And then we don't get up above that point really until around here. It looks like this is a pretty sure bet to get in here, but you could have just waited until this moment here, but it's so close. Why not? And then put your stop at either prior day's low, the 100, or low of the day. And then it takes off. So see, one false start one good entry. And here I am here on this one, and who knows? Maybe it's going to come down and knock me out. Well, actually, it's perking up right now. Or maybe it will result in a beautiful run. Now, the rate that you can, hope to expect should be something that matches where it's at. So how is it lined up? It's lined up like close to the 50, above the 100 and the 200. And so what angle do we get out of that? Well, previously it was like this speed, so we could expect at least that. But at one point it started to ride the 20 moving average at that angle, so we could maybe even expect this kind of rally speed. So that's what we're hoping for, and that should be enough energy for it to continue. Either of those paths will be fine for me to higher prices. And my multiple would be maybe about 3 to 1 to about there. But you never know, because what if it goes on one of these? Let me just draw that again. What if it goes on one of these from entry? And that would be an incredible angle, and it definitely would be topping action. And so you want to get out, and snip it off nice and tight. But depending on how loose, medium, or tight, uh, depending on how aggressive the move happens, is how loose or tight you should have your stop. Probably, you can approach that philosophy in the moment, because there's nothing that's always true. So anyway, that's how I look at it. Visa, we got an alert there. I'm going to show you more in a second. Visa with a very nice breakout type entry or right now. Stop, I'd say either low of the day at 357 or 355 right here. Low of the prior day. That'd be even safer. Think about $8 a risk or $7 a risk. Entry now, and you're hoping for some of this beautiful rallying action that it tends to have. And it's after earnings, so it's free to run. So that's good. Visa. CME also alerted while we were talking. Now this is a pullback entry. Bounce off of the 50. This is what I want. I want these, but I think, yeah, I'm fully allocated. Good luck to you. Your stop on this could be, I just put it at this low right here. That's the 50 moving average. It's perfect. 265.50. 265.50, entry at 273. So we're gonna put that trade right here. Good luck to you guys. And that'd be a entry that doesn't come that often on CME. As you can see, you would be getting in like here. That's what this is. It's equivalent of getting in like here and here and here. So 1, 2, 3, 4, 5. There's been 5 opportunities like that since December, November, October, September, July, in just under a year's time. So this is a once in every 2 month moment right now on CME for entry. Do I have CME on my list? And we'll go through more on my list in just a second. It's not. I'm going to put it on. I like it. But I'm fully allocated, so I'm okay. You do what you need to do. CME, it's on the list. Other alerts, yeah. Let's just make sure we're not missing anything. MCK. That's it. Undercut rally entry on MCK. There it is. I'm not in it, and I wish I was. I got knocked out the other day, I guess, and maybe moved my money along. But this entry would be, where it is right now. To stop at the 50 moving average, which coincides with low of the day, 681. You can make it 680 if you want to be safe. Anything down there. And again, those kinds of entry, it's a pseudo cheat entry. It's better than a cheat entry sometimes, are coming up like this often. You want a strong move down, and then you find the entry. These are them. 1, 2, 3, 4. Today's a one in, these are like rare opportunities. These are what you're waiting for. Would you rather get it when it, you know, breaks the high? You have that option. But it's sort of like put credit spreads, in that if you enter on the pullback, the downside is less likely. But if you enter on a breakout, the downside is possible, although it didn't happen here. Okay. But downside is possible. Here's an example. Breaks out and then it just can't quite go, and then downside is possible. Not that you can't get out, and you should at your stop or beforehand or whatever you want to get out, and maybe you make a little money, or maybe you break even or you lose 1R. But the point is, it's just probability wise more likely that the move's going to go up when you get in on pullback. That one's not the one I wanted to describe. Here, 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 than it is when you're getting in on breakouts here. It has a good likelihood of coming down every time when we hit tops. So anyway, MCK, perfect, beautiful entries going on there. EQT, that's a pullback, undercut and rally entry, which is just more protected in that way. EQT is just continuing to progress. And, I'll be looking for pullback on that. I need some water. My voice is a little bit dry. I'll be right back, guys. I do need some water. Okay, I'm back. Uh, so what do you think so far, guys? You taking any of these positions? It's good stuff. It's good stuff. Market is moving nicely today. Some of these entries are very nice. Okay, we put CME on the list. Looked at NET, GE, AXP. I think that's where we left it. And then we checked out some of those alerts. See why I like AXP? Like, look at that chart, right? Like, you can see why I like it, right? Okay, hold on one second. So, anyway, you see what I mean? AXP, it looks pretty nice. Do you see that, guys? I want you to be able to see that. It almost looks like the market itself. See that? There's the market, and here's AXP. I mean, it's all good, It's all usable. It's all workable. Continuing to look at stocks here on my hot list, TGS. So this is nice because it's building that long base. It will have to contend with all this overhead, but it's not a lot. But it is kind of recent, but it's not a lot. So when it blasts through, it will have to be on increasing volume. You'll need to see better volume than this, but it looks like it kind of is in order to blast through it all. So it might break out, but this is not the kind of breakout that you want to grab. Maybe, but it depends on if it, like, for example, if right before the breakout, the moving average caught up to it, and then this one's coming up this way, and this 100 turns, and you've got the 10. Let's see, the 10 going like this, and etc. And the thing is, over the course of a little while, it's going like this, and then it perks up, and then here we are at like earnings, and it's all coming into this like wedge, right? Then you do want to take the breakout wherever it happens, because that's just a lot of it's built up a lot of time energy, and so when it breaks out, that time energy can be exciting. It can create excitement, and that could be enough to make it make a move, and that's all you need. And you only need 20%. Really, it's up to here, to really have a maximal amazing move. You got NXT T2 CME. Picked these up this morning. Okay, great. NXT. Let me put those. Oh, look at IXH. Are you still in IXHL? Because it looks like it's moving fine. Palantir is disappointing me. Let me see this. Dave. Okay, Dave alerted. Only because it pulled back to my alert line. So now what I could do, though, is I could put that above the alert line there. And tomorrow, for example, could be an entry. That would be continuation. Okay. Let's see. Tesla, IBIT. All right, let's continue to go through. ODD, this is on my hot list. Look at that. This is looks like an undercut rally type style entry, right? Opportunity. Like, if you really start to get good at the undercut and rally pattern, then when you see something pull back or the market pulls back heavy, like, that's your moment to shine. All of a sudden, market pulls back. Now you're looking everywhere for those perfect setups, and you set up all those alert lines, and the next day, or maybe in the same day, depending on how it bounces, you can get in. Because you can have that Charles Harris type reclaim. You see it right away now. You saw it right away? Oh, good job. So you saw that here. That would be the entry. Now, theoretically, it's not an entry till it gets above the moving average that's significant that it fell through. But there's no reason why you can't get in here. It's the right pattern with a stop maybe down there to give it a try and start to build up a position. By the way, when you get in a quarter position like there, so let's say you got in a quarter position there, or a half. Let's just call it a half. And you did it on a tight stop, let's say. That's why. That's why you went half, because maybe it pushed real hard. Maybe it was looking good like this, okay? Then it pulls back and it starts to base in a little bit for a few days. It catches up to the moving average and then it breaks again. You see it make a strong move. That's what you're waiting for. When it makes that strong move, you add. You add. It moves your average cost basis up a little bit. But you probably can keep the same stop, and the whole thing just sort of works out at that point. And you use the strength of that moment as it creates protection. Whenever there's a strong move, the low of that strong move tends to be a line in the sand that it never gets back to. So if you had a strong move many days later and you have a little position that you started because of a little thing like that or set up that you weren't 100% sure about, but then it makes that strong move, time to add, because it's very unlikely on a strong move that it will get back below that level. And even if so, you don't give a fuck. You don't give a shit because you already have a lower average than that anyway. What I'm saying is that you're going to get the potential protection of that line in the sand right there, but you don't even need it. It's just, this is a very obvious ad because you don't need that line in the sand, but that's very likely where it's going to end up being not returning to that level. And yet, even if it does, your cost basis is going to be maybe a little bit lower than that, and your stop level can be much lower than that as well. And it's all the same leverage wise. And you can even get out at break even if it does come back. These are choices you can make, or you can just exit the ad at that point and keep your half and you keep riding everything riding, and you're building up a position. And that's how you can use the tester positions. Tester positions should eventually be added to. They're not just going to sit there. Testers are for adding and building. But that said, I do have a lot of test positions that I fully financed. I started at either half or I started at full, and I knew they were tests, and I either started at full or half. And then I turned them into financed positions. So I don't know what you would call that, a little dollar sign here. And then now I'm waiting to snowball them. So like for example, and I'm letting them ride, like for example, LRN, I'm letting it ride the 50 moving average, which is my green line on my charts. Where is it? It's coming. There it is. So the 50 moving average hasn't even caught up to my break even stop yet, but I have no worries or concerns that it will. It made this move, and you could say it was where I wasn't worried though. But eventually, this 50 moving average will start to reflect what's going on here, and it's going to start to curve up a little bit more like this. And this may be moving all around. I'm going to let this thing ride the 50 moving average. And so it may just, if you zoom out, it may ride the 50 moving average for a long time, like it did here, all the way to here, which would be perfectly fine as far as profits go, because you don't know when it's going to stop. So 125, that would have been something like 88 to 125, or 40% gains in 4 months on one position. However, of course, you could take a teeny piece out up there, and this one also has the ability to do snowball. So I could have added here and raised my stop and all kinds of wonderful things that we know how to do. You know, Like I've been teaching you guys. I mean, Michael, you've only been with me for a year, I think, and Randy, a year and a half or something. But some of you have been with me for years, and there's just so much you could do. There's so many things you could think about and you could do in these situations. Oh, 4 years. Okay. But not regularly. All right, all right. That's one, and then CRK is another one. Like if you want to just see what these look like, CRK is another one that I have set financed to ride the 50 moving average. So I will let it ride the 50 moving average. Here it is. Um, but my break even stopped because I got out at better than 1-to-1. Because here's my original entry with 1-to-1 risk. And then I got out at like 3-to-1. That financed my stop down to here. I'm break even if price gets back down to here. And the 50 moving average, as you can see, is above that now. So no matter what, I'm making money if I follow my rule of following the 50 moving average. But what I'm really hoping for is that, well, I mean, obviously I'd love for this thing to just go to 100 and be the next GME. We're not going to, but that's not going to happen. Okay. But what I'm really hoping for is, what was I drawing here? Is for it to, do something that kind of hangs out for a while and provides me one of those strong days I was talking about where, yes, I get in late, but I know it's a strong day with a long, not a very much likelihood to come back to that level. And I'll add, and I have my break even stop down here. I could double my position at that point. My stop would move up here as break even. Right? My financed free rolled break even stop would move up there. And then look, that would be right below there. And now I have a double snowballed position, riding still the 50 moving average is how I can play it out, or there's lots of things, and then if it goes on a parabolic move, I can just snip out and take my profits, not looking for, not necessarily looking for monster moves, but we hope they happen, but not necessarily, just putting your money into something in a way that responsibly allows it to be at risk. And putting it at no risk is a really responsible way to be in a position. And if you can do that, enlarging the position and getting more higher concentration on it, save for it announcing it's going bankrupt, you're putting yourself in a great situation because now you're essentially leveraging. We talk about free roll and all those concepts all the time. So anyway, that's the morning so far. I have so many more. I have just like so many more. What I'll do is I'll take a photo of it and I'll post it to the group. Okay. So everybody who's watching, if you're not in the group, then go to the link in the description and come over to the group. I'll post that there if you want to see what it is, and I'll post that there in just a few minutes. But thank you very much for showing up this morning, and hopefully that gets you on track for the day. I think the day is okay. Like I told you, I think rates are showing that the market's going to just sort of hold here. And I'm just absolutely loving this market right now. I think it's a lockout rally. And until it deprogresses any progress, then below any progress support levels, so like this low here, then we're still in a lockout rally. All right, so all right. How is IXHL? I got to check on that because I got you in this far in it, and I don't want to just drop the ball on you here. Okay, so he's in a fully financed position. Total house money, all profits, riding. So what you want to do now, Michael, is continue your pivot point technique, pivot point stop raising technique, using whatever transpires across this entire move. That means it includes yesterday or however many days it's been moving, So you want to keep like a 5-minute multi-day chart up and out, so you can figure those stops. Because let's say it goes above 124 today. Well, between there and 124, you can already pre-predict that the stop then would be unchanged. It'd be the same level. See, so even if this thing runs all the way up to 124 today and then pushes further, you already know your stop level hasn't changed. So in some sense, mentally, you have to say to yourself, then if I don't take any profits here, way up high at 124 and it breaking out, then I'm going to give it all back unless it continues to progress. And so I personally would want to take a little bit. However, but because it's house money, that is a special situation. Personally, I, with just house money, would just let it play out through the pivot technique. So, but I'm just saying if you were, say, day trading this, or it was still your risk capital, I would want to probably take out profits and gains as it, breaks out a little bit up there. But I would not if I'm playing with house money. I just let's see where it goes. It could go to zero and you lose nothing. It is a junk ticker, but yeah, I don't think you really need to do anything because it's been behaving. It hasn't misbehaved yet. There's been no pivot breakdown so long as you read it correctly. There's been no pivot breakdown on the advanced pivot reading. And so that means it's behaving. A stock that behaves, especially one of these penny stock biotechy type things or whatever it is, uh, yeah, the party will be over here at some point, but a stock that's behaving this long, it is pretty rare. And so I'd like to see where it goes. If I have free house money, I would just you know, just let it do its thing. But you could put a stop. You could put a literal stop in there somewhere at 0.6 or something. You don't even need to because it could go down to even 0.3 and it's still house money, but it probably would go to 0.3 and never come back if it did. But you could roll back you could like if you needed to go to the grocery store or something, you could roll back your stop to like 0.5 from yesterday, 0.48. Remember this one? You could roll it back 2 stops to give it a little extra padding to let it dip below the actual stop and then reclaim because it might be just a shakedown because this stock is behaving pretty good. You have to give it some benefit of the doubt sometime on a stock that's behaving good like that. All right, there you go. Have a good morning, everybody. All right. Bye now. Thank you.